Picking up the polls of the day, now joining us is Dr. Ayodeji Ebo, who's the MD, Chief Business Officer, Optimus by Afrinvest. You're very much welcome to the polls of the day.
Yeah, good afternoon. It's great to be here.
So, still in the aftermath of last week U.S. election, we're seeing that the impact on the markets, the U.S. election and the Federal Reserve's recent decision to cut the interest rate by 25 basis points is still driving a lot of foreign portfolio investors into international markets and the movement towards emerging markets like that of Nigeria. What's your take about this?
Okay, thanks. We all know that the president-elect Donald Trump is pro-market, and they expected that a lot of companies within the U.S. Would enjoy a lot of tariff and benefit to ensure that they grow and they create more jobs. So on the back of that, we're seeing a lot of interest in the stock market, especially for those companies that are really based there and they produce within that economy. They would also enjoy that support. But also now speaking to the emerging markets as well as other markets, we think that like the likes of China, the Euro markets, there is going to be likely to be like a tariff war where the US would want to protect its own or make its product more competitive. But to attract investment into the international or the emerging market, it's going to be policy driven. So for Nigeria, for us to be able to attract or benefit significantly from this, our FX management regime also needs to be a bit stable so that investors are able to predict their entry and exit rates. So it's not just because the funds would follow where there's a bit of stability, a bit of being able to estimate what the exchange rate would be within the period that they intend to also come into the country. So that's what I think we would see. The euphoria is still, the excitement, I would say, is still very there, even as markets opened some minutes ago, especially the US market, and we expect that gyration will continue for a while.
Okay, well, how long do you think the rate cut is going to be? Because there are lots of speculations around the fact that we're going to experience some capital flight coming to frontier markets like that of Nigeria. And you know we have the market. You see what the CBN governor is doing, increasing the interest rate just to make sure we're very much appealing to a lot of foreign investors. Do you think they're forthcoming? And do you think the further rate cuts in the U.S. will bring about a forex FX inflow, will increase it? Do you think it's a great time for Nigerian market and for the Nigerian economy at large?
Okay, thanks. The CBN is trying its best, but creating that enabling environment to attract the capital is not just the responsibility of the monetary policy authorities, lies with the CBN. So we think that even if capital interest rate goes down, even in the developed countries, we are going to be competing with countries that have have a bit of stability in their FX. You see the likes of South Africa, Angola, for those that have more developed markets. Before we begin to also enjoy that, the investors will be more interested, especially for FPIs, is going to be our FX management. How are we able to manage our FX? Are we able to guarantee that the depreciation will not be that significant? And if we look at it, the production, non-oil exports is still very low. So which is a signal that we may not be able to sustain our FX at the current levels compared to some other nations that are able to do that. So it's going to be, it's not going to be given that because the interest rate would come down and investment in the US will become less attractive. That would definitely get those funds. We're going to compete with neighboring countries, African countries, emerging countries, based on the policy-driven environment.
All right, so last week and this week has been an exciting time for the crypto market. You've seen the crypto market literally, Bitcoin literally edging in on the $84,000 mark, and a lot of investors, a lot of analysts are really excited about this season. The market capitalization now at $1.64 trillion. That's a whopping sum, if you ask me. And it looks like now that we're edging into the Trump administration, it looks like cryptocurrency is going to be mainstream, because he's very pro-crypto. What is your take about this? Do you think we've seen the peak? Do you think we're going to experience some retractions in the market? Or perhaps whether there's a way for this particular asset, knowing fully well that it's a very, very volatile asset?
Very interesting question. I think that I would agree that the adoption of cryptocurrency, especially Bitcoin, would improve. We are also aware that even apart from the newly elected lawmakers, more than 100 of those lawmakers are also pro-crypto. So the support would also be there. But beyond the campaign around crypto, now I feel that what even Trump will be doing is to see how they can also strengthen policies around that. So there's going to be a lot of interest. There's going to be a lot of campaign or interest in cryptocurrency, especially the mainstream. I think that we all know that even for the medium to long term, there's still a lot of potential. Even when we see a decline, there's still a potential for long-term investment, given the adoption of cryptocurrency. And with policies, we see BlackRock, likes of BlackRock, Coinbase, the policies around that, creating spot ETFs around it is also generating improved interest. You see the Ethereum is also have been moving significantly because of that.
Okay. On a final note, locally we've seen the bank earnings coming, and a profit taking. I've been following that particular event. But looking closely at their earnings, it is evident that net interest income, like the FX gains in the previous quarter, appears to be the item predominantly holding up the bank earnings result from Q3. What's your take about this? Obviously, you're saying Caesar coming in for what belongs to him in form of windfall tax, and it's literally affecting their earnings for Q3. What's your take about this, and what should investors be looking out for?
Okay, so looking at the Q3 result of the banks, there's one recurring decimal that we can say is the high interest rate environment. So when you look at it on a year-on-year basis, interest rate has literally doubled. You see what Omo is doing almost at 30%. See even what Treasury bills is doing at above 25% to almost 30% at the last auction. So the banks are benefiting significantly from that. There's been less reliance on FX gains. When you look at the interest income, it has increased even at a significant or very positive rate. So that is what the banks are enjoying. So, however, the caution that we are seeing here, or the bit of reversal that you would observe even at today's market, is that investors are pricing in the post-offer listings. So for most of the banks that have concluded their public offers, when those shares are finally listed, you will see United Capital, for instance, that
Dr. Ayodeji, I'm afraid we don't have time on our side. I would love to cut you here. Thank you very much for coming to the pulse of the day. It's been a great conversation so far. Dr. Ayodeji Ebo, the MD, Chief Business Officer, Optimus by Afrinvest.